Contrarians, welcome back to the Encrypted Capital Recap for Monday, June 6th. First off, finally got some green on the board after 9 straight weeks of decline. We're starting to see a little bit of green, although I am not convinced that everything regarding the sell-off is over. Still a good chance we can come and possibly sweep these lows. Really hard to say because that Luna crash was such a max fear event for the market. It would be, I don't say out of the realm of possibilities, but what else are you going to have that's going to bring it right back down there? There have to be maybe some geopolitical freak out. I'm not exactly sure, but it is nice to see that some things are up today. We'll go ahead and just check out the top leaders real quick. First one on the list is that Scrumble Network, SKN. We put that out in our newsletter a while back. It's up like 208%, but it did fall off a cliff a little while ago. So also got Dragon Chain, Solana up 10%, looking good, strong, Neo, Omise Go. Multivac rounding out that top 10. But let's get into the news real quick here. So first off, as mentioned, Bitcoin rises after snapping longest ever losing streak as investors seek a market bottom. Like I said, not 100% completely sold, but I do think that anywhere in this general area for buying Bitcoin and or altcoins in general is probably pretty good. While you won't exactly time the bottom, most likely if you do, you get lucky. But I still think this is a good area, and I am anticipating some type of move up to the upside definitely in the next month or two. Hopefully way sooner than that, but time will tell. Also wanted to bring up here that the Ethereum founder, so we're talking about Vitalik, guys like the size of a toothpick. He criticized New York's Bitcoin mining moratorium, says he opposes the banning of proof of work. So basically what's going on right now is, look at these watches, Rolex Daytona, Epic. The one I like, I actually was looking at this right after I caught that ad. Thanks, Fortune. The one I've been wanting for a minute here as we dip into my Rolex wants here would be the Rolex Yachtmaster with the rhodium dial 116622. Absolutely epic. Wanted to pull the trigger on it last year, but was lazy and just didn't do it. And sure enough, it's up $6,000 since that time, trading at $18,390 for a used one. So we'll see. Did think this was cool with that cyan hand, but enough of the Rolex stuff. So anyways, Sky Dweller, also epic. Essentially, Vitalik was stating that he didn't agree with the proposed proof of work ban in New York. So proof of work basically is what Bitcoin runs on. Essentially just uses hundreds of thousands, if not millions of computers to run and secure the network and to run all those computers. Hence, it's a drain on energy consumption, which is why we've seen some blackouts in other countries before. I can kind of see this narrative unfolding about Bitcoin being bad for the environment, but in the grand scheme of things, there's so many things that are terrible for the environment. I think they're kind of just rolling with this proof of work narrative here, trying to, basically make miners move somewhere else. But I think that they will essentially slide in something to where they want to either have some sort of carbon footprint tax for miners, or this could just be a way for them to shift into using a more decentralized asset that settles faster, maybe uses the consensus protocol. You're talking XRP, XLM. Since they're not using a bunch of computers to run the network, they have nodes, multiple nodes that help process transactions and secure the network, etc. So we'll see how this whole thing unfolds, but he did come up with something that was interesting. He says ultimately he agrees and opposes the banning of proof of work and the government picking and choosing which specific applications are okay use of electricity or not is a bad idea. Better to just implement carbon pricing and use some of the revenues to compensate low income users. Also an option. I really don't care either way. Our assets are really aligned in those ISO assets, so I don't really care what happens to Bitcoin in the short run. I guess I think a lot of these other assets are going to be taking over that are newer technology that are better for the environment. I mean, we already kind of saw what they did with XRP and prohibiting trading in the US for like 99.9% of the exchanges right now. I mean, KuCoin is one, I believe Bitrue is the other that you can buy XRP on still. So if they want to start going after the on and off ramps, they don't necessarily have to shut down the actual project itself. But if the prices are falling because no one can trade and that scares the market, I mean, very easy for a coin to go to zero like we saw with Luna. So also wanted to point out here today, this came up from Cointelegraph, and this was basically talking about 5 reasons why Bitcoin could be a better long-term investment than gold. So assuming that they don't decide to go after it and say that it's bad for the environment and start limiting these on and off ramps like we just said, it says like some crypto advocates often refer to Bitcoin as digital gold, but how does BTC stack up against gold as a long-term investment? Now, I know personally, just without even reading this article, that the average ROI for Bitcoin is 200% a year, given all the bull and bear markets in between. If you held this asset since the beginning, you can expect a return of 200% year over year. And I think Backer pointed this out too in one of his videos, where it was the anticipation of inflation that increased the price of Bitcoin. It wasn't necessarily inflation being prevalent. So it was just the anticipation of it. And so we'll have to kind of see how this stuff plays out, because it seems like a lot of what these people thought these assets, or I guess a lot of how these people thought these assets would react, it's actually kind of gone the opposite way, right? So, inflation is here and the price of Bitcoin has deteriorated over the course of the last 9 weeks, right? But the events leading up to the anticipation of things getting more expensive really helped act as a catalyst for the price from 2020 into 2021. So now we have the value retention. And so again, with it being a store of wealth, it's really hard for something to be a store of wealth if it's prone to dropping in price 80 to 90%. We've seen that happen multiple times for Bitcoin. So I think that the returns from the beginning are obviously, awesome, but you would have had to have been holding it since Bitcoin's inception to be getting those kinds of returns. Now, if you go back and look and see that, when Bitcoin hit $1,200, if you were able to go ahead and wait through that, and that was back, I think, I want to say like 2012, 2013, so a few years after its inception, you're still able to pull 20 to 60x, even if you're buying the top of that, assuming you're able to cash out, when it got to $60,000, $70,000. But if you were just buying on the last run up, chances are you probably got in somewhere after $10,000 or $20,000. So, you made 300%, but a lot of people were still holding out for bigger gains in Bitcoin. And we kind of were already at that point where we thought Bitcoin maybe ran out of gas and a lot of the money to be made would be left in the altcoins. And we're still waiting to see a really epic altcoin season. We did kind of see that at the start of it. Some of these assets like Telcoin, they went up like 500% or more. I'm sorry, not 500, 5,000%. Absolutely insane gains. And then you had some assets like, Bitcoin Cash, maybe didn't perform as well as it did the last run, but you're still talking like 8 to 12x in a lot of these assets. So while it wasn't the crazy blow off top that we were used to seeing, the gains were still there. But I think a lot of people got deterred and maybe were just kind of being greedy in trying to hold out for way more gains because we were so used to seeing that over the last couple bull runs. So, it's really hard for me to say if it's going to be an inflation hedge when we're kind of not seeing that happen right now. So we'll kind of have to wait and see how all these assets play out. But I would anticipate, like I said, this summer maybe being positive for Bitcoin, at least having a few monthly green candle closures. But these markets are super unpredictable. So if it's not going your way, you kind of have to have that macro approach, knowing, basically knowing what you hold and why you hold it and what the potential is for some of these assets. And until, like I said, our opinion, the hedge funds, a lot of them are rigging these markets, basically similar to the same way that JP Morgan rigged the metals market, right? So like JP Morgan had paid $920 million for manipulating the precious metals market. That was back in September of 2020. And they've been hit on the hand multiple times. This is not their first go around, but this is the cost of doing business to them, right? So, it's very important to note that these hedge funds, they don't need the crazy 1,000, 2,000, 3,000% gains in a lot of these assets. They're playing with so much capital where if they have $100 million in an asset, A 10 to 20% rise is epic for them. They just made 20 million bucks, and they don't have to wait for those crazy, elongated, patient, bull markets. A lot of that stuff has to get built up, and then the real grand finale of these assets are like a quick 4 to 8 week run up, and then that's it. I mean, we've seen that happen time and time again. So the hedge funds are here, Wall Street is here, 10 to 15% gains. They're making an absolute killing. So you guys got to keep that stuff in mind. They're not really going to let this stuff blow off until they're ready to, and they've accumulated enough of these assets. So also wanted to point out here, speaking of assets that are here to stay, assets that are fast, secure, decentralized, but don't take up nearly the carbon footprint as Bitcoin does. That's XRP, right? So this came out just yesterday. Former developer advocate at Ripple, he said it's possible for XRP to one day hit $100. And a lot of people want to go and bring up the market cap, which I think is absolutely stupid. So if I go mint 1,000 encrypted coins and I sell one of them for $100, does it mean that $100,000 automatically flowed into the market? Because that's really all it is. It's the cost of the asset times the supply. So it's absolutely ludicrous that people put so much weight on that stuff. It literally means absolutely nothing, in my opinion. And so XRP hitting $100, here's how it happens. If they're going to be working with Swift and taking over the amount of money that is flowing through their ledger in order for these big corporations and central banks to free up capital and send it in 4 seconds, how can you have an asset where there's only 100 billion of them in existence and not even all of those are able to be traded? Some of that is locked up, right? But let's just assume for the sake of numbers, 100 billion XRP is all that's ever been created and all that ever will be created, right? Right now, in order to move trillions of dollars, how could you possibly do that if you have an asset that's only worth 50 cents and there's 100 billion of them? That means you could only possibly move $200 billion worth of assets, assuming that they're all going to be utilized all at once, right? Not to count the holders, but like I said, for sake of numbers, 200 billion, the cost would have to be worth way more than that. To tackle trillions of dollars a week, it has to be in the hundreds or thousands of dollars, plain and simple. So if you're using XRP as a bridge currency and central banks are sending back and forth hundreds of millions or billions of dollars at a time, that's how you get to those higher valuations. Can't have them trading at $1 or $2. You can only move $200 billion then if they're worth $2. So think about that when people want to go ahead and say that the market cap, it couldn't be possible. Like, do you have any idea who you're dealing with? And I'm reminded of this clip.
Do you know who you're dealing with? Chill, nasty Nate.
Do you have any idea who you're dealing with? Talking about Ripple, XRP, valued at tens of billions of dollars, massive partnerships. I mean, this is just like a drop in the bucket of their partnerships that they have. Think about that. UBS already on board, right? Bank of America, Western Union. MoneyGram's no longer with them, to my knowledge, but Samsung, Deloitte. I mean, go down the list. SBI Remit, and they also have a huge chunk of Ripple ownership. This is the new financial system that is being built in front of your eyes. If they pull off what they want to utilize XRP for, it'll be the biggest, or it still is, the biggest opportunity of a lifetime in our opinion. Do your research. Look into this stuff, because if you missed out on Amazon or you missed out on Apple or you were too young, this is your time. XRP, Ripple is your segue into the upper class, in my opinion. So if you're smart, you do your research, find out what you're invested in. This is what's taking place here. And don't forget about XLM, because it's a carbon copy of XRP. And all they're doing, instead of using the banks, they're going over to peer-to-peer. It'll be used by everyday people, not banks and companies. So With that being said, don't forget, sign up for the newsletter if you know it's good for you. Great way to support the channel. Share this stuff. Get this stuff out there. Hope you guys have a great day. And we'll catch you all in the next one.